And a very warm welcome here on the 16th of February 2018 to the Master the Markets Forex Friday video update. And I'm aware we haven't done a video update on Forex Friday for quite a while now. Certainly this is the first one of the new year, and there is a reason for that, and that's because the market has just not given us a signal according to the trading strategies that we have been running here in the Master the Markets live trading room. So the first 6 weeks of this new year have certainly been quiet for us, and we've had to remain patient, but that has now been rewarded in kind. And I want to go over some of the trades that we've taken this week. As you know, we do this all transparently, so you can see update trade by trade exactly how the performance of the live trading room here at Master the Markets is, and you can understand and get a feel for the trading strategies that we're using here to make real-time profits here in real time with exact quantified trading strategies. So the format of the video is going to be the same as other Forex Friday updates we've done in the past. We're going to go over the live trade mentorship positions, first the closed ones and then the ones that are open and running. We're going to go over our reasoning for the actual trade opportunities that we've taken. We're then going to go into the elite trading positions for the week, if there were any. We will then go into the learning topic for this particular day, which is going to be all around outsider bars. And I'm going to go over outsider bars. I'm going to quantify them, and I'm going to give you some key statistics which you can start investigating to monetize. And I'm going to talk to you about some research that I'm going to be doing around outsider bars very, very soon, so we can formulate a trading system and a complete model, a mathematical model around that. And then, of course, the opportunity to comment below, and I'll tell you what we want to do for the Forex Friday this afternoon. We're going to be putting up the update. We're going to invite you to interact with us on the comments box. So, and then I'll close the session off. So let's kick off by looking at the live trading room and the closed positions for the trades that we've taken this week so far. So if I refer to the live trade mentorship journal, you can see here I'm on the Liftoff 3.0 cash tab, and that's because that's the current set of trading strategies that are running. I'm going to go over to the Money Bars 2.0 cash tab to start with. Let's zoom out of this a little bit and let's have a look at the trade that we took here earlier this week, actually on the Sunday evening, the 11th of February. It's the Sunday just there. Let's have a look at the trade opportunity that we actually took. It was on Money Bars. Money Bars, as some of you following will know by now, certainly is the strategy we look for reversals, and it's the one where we look for PSWBs, which stands for potential swing bars, to become swing bars. And so you could see on the Sunday we actually took the trade here on the close of Friday's bar. We went long the market actually on the close there, so on the open of Sunday evening. We had quite a tight stop in the market just there, so we had a stop in on the low of this particular bar just here, and our goal was for this to actually become a confirmed swing low according to the Master of the Market Smart Money indicator. And you can see that, of course, the indicator did not give us this arrow and this information straight away. Rather, we needed to wait for it. So we took the market long on the Sunday, and then the Monday kicked off, and then only on Tuesday's close you can see we actually got the confirmed swing. And with the Money Bar strategy, what we're looking to do is actually looking to hold that. We actually look to hold it for 2.25 times the PSWB's range. So we actually look to do that. I think, interestingly, the team did make a small mistake actually on this particular trade, because where we should have left it to run for the target, we actually took it out on the close of Tuesday, and that's because that was an old set of rules that we were actually using. So instead of actually taking it out on the close here, which was 123.52, what we wanted to do was allow it to run for target. And you can see this on the journal, because on the journal, of course, on the cash tab, which is the one we took in the live trading room, where we made that small mistake, we banked out a profit of 2.13%, taking the market out at 123.52. So we went long at 122.50 with a stop 122.02 on Money Bars just there. and the exit price 123.52, giving us 2.13% or 102 pips. What we wanted to actually have done there, according to the system tab, what we should have done is entered at that same price, but we should have let it run to target, which it actually achieved on the next day, and that actually gave us a 2.9% profit target just there. So actually 2.9% is where we would have exited the trade for that profit just there. So really good start, strong start really to February just there, with a profit of 2.13% in real time. And then of course lift off over here as we move over to the open positions on the journal. This liftoff is trades that we've taken here both on the 12th. That's just 4 days ago. I believe that represents Monday. Yes, it does. So Monday the 12th is when we took these two trades on. Let's look at both of them individually. So first of all, let me switch over to the liftoff profile. Here it is. So you can see Euro US dollar. We actually went long the market just here on this dash green line. We're long the market from 122.99, and we had an initial stop below this low just here. So actually our initial stop was below this low, initial stop loss, and the reason for that is because this is the primary -1. This is the bar we were looking for to become a swing. It actually overlaps with the money bar strategy, because as we were long on money bars, we entered a second position on liftoff. But that's fine because they're two independent strategies. They have two independent risk profiles. We know the maximum drawdown for each strategy, so that's absolutely not a problem to do just there. We took that long on the Euro US dollar just there on the high here. You can see we put in an initial stop here, and our target is 3 times the trade risk. So we're looking for actually 3 times that distance to be traveled by the market. You can see today haven't quite made the distance, and it looks like the euro dollar is pulling back. It's not to worry. We have a perfectly excellent trailing stop loss mechanism in place. In fact, the trailing stop loss on the Master the Market live trading room and elite strategies is so superb. It actually helped us to avoid this stop taking spike just here as well. This is without a doubt a stop taking spike. There were stops down here, and we didn't trail our stop to this point because on the liftoff strategy we have to wait X number of days before we can actually trail our stop. So there is a certain number of days in the trading plan we need to wait before we can trail our stop, and that's the nature of liftoff. Of course money bars is completely different, but money bars we weren't in the trade actually at the time. We would have actually taken this opportunity because we of course took it out on the close, but we still banked out a profit there as well. Key thing here really that I'm looking for that's excellent is this trailing stop loss that we're using, because the trailing stop loss helps us to avoid the stop taking bar. We're still moving higher. We do have another signal to trail today, so more than likely we're going to trail our stop to the low here for Sunday evening. What we'll look to do then is, of course, minimize any potential reversal that's coming against us. What I'm looking to happen actually into the rest of today, it's only 1 PM. I'm really looking for this actually to reverse. Friday is a day known for reversals, and I'm actually looking for this market here today to reverse and go back up towards its high. That would be my gut feel on this, but it doesn't matter what happens because we've mapped everything out mathematically. That's the Euro US dollar. If I switch over to the Aussie dollar, let's bring that up onto a chart. Let's replace this Euro Yen one temporarily. And there's the Aussie dollar. Same thing really. It's a lift-off strategy setup. We had the confirmed swing high. All the other criteria by the Master of the Market smart money indicator were met. Primary -1. Again, look at this. We avoided this stop taking bar. We are still in this trade. And this is still netting at this time a £228 return. The £477 return there is currently indicative of the Euro US dollar, a net current profit running of £690. That actually represents around 3% on this trading account, which started at £25,000. This trading account we've managed now for a year. We've taken multiple setups on it, and we have made slow and steady profits all the way through, and you can see we've taken small losses as we've gone through, and taken some small profits as well, and it looks like we're going to be taking some larger profits into today. So very limited number of trades really on the liftoff 3.0, a very steady system nonetheless. I'm looking to close the year on this liftoff 3.0 in June this year. I'll be looking to close this year with around 10 to 15% upside. We've currently got roughly 7% net return here on the account at the moment. I'll be looking to double that into the next couple of months. So certainly watch out on the live trading for those opportunities. We're very excited about that. And so these two positions are running at the moment. We'll continue to monitor them into next week. Nothing new to update here really on the Elite Journal. We do have a trade running on the Euro US dollar on smart money. We're long the market from 120 to 92, and of course smart money runs for quite a while longer, so we're looking for 536 pips of upside, or just under 6% profit on that one. So we'll continue to monitor that, but that's the smart money trade that we've taken on the market just there, looking to hold that for the long term. We'll continue to update you on to those ones into Forex Friday next week, because I'm sure we'll have some closed positions into next week. That just brings me on to the topic for today, which is all around outsider bars. And outsider bars are a superb reversal signal in the market. They can be a reversal signal, but you do need to know what to look out for. It's not just any kind of outsider bar that you're looking for to build a reversal signal. Outsider bars have very specific features and properties to them. So if you look, for example, at this outsider bar that's set up in the market here on the 12th of, in fact this is the 8th of December 2016. If you look at this outsider bar, notice a couple of things about it. First of all, it has an unusually large range for the rest of the bars on this chart. That's the first thing you should notice. This is an extended range, and you should quantify. I have an exact mechanism to quantify overextended bars, and you should also come up with a method to identify what is an overextended bar, so it leaves no room for subjectivity. Remember, everything here is fully quantified at Master the Markets. It is very tight. So when I talk about extended bars, I have an exact figure, an exact value, variable in my mind for what is classed as an overextended bar, and that's very important. You've got to have that in play. So certainly put that, take that into note. It's an overextended bar just there. So these outsider bars have unique properties as well. You have to understand one specific thing about outsider bars. A lot of people look to them as reversal signals, and they are, but they need to meet this one key criteria, which I'm going to teach you today. What the important feature of an outside bar actually is the distance in between the high and the low. The exact 50% marker there we call here at Master of the Markets MP, or midpoint. Now if the close of the outside bar is below the midpoint, then this has a certain set of statistics around it. And again, if you look at this outsider bar here as well, the same things happen. The close is below the midpoint of the bar, which will be around here. How can you work out the midpoint of a bar? Very easy. High minus low divided by 2 plus the low on this particular bar just here for short certainly will give you the midpoint. So that's the midpoint formula just there. So you can use this midpoint formula to understand how to navigate the market with outsider bars. Work out where the midpoint is, look at the close in relation to that, and then start to study around that. Overextended bars is what you're looking for. I'm going to give you some statistics here that's going to help with your research on this, and in the comments below you can leave any questions that you may have around this, or any research that you've done which you found interesting statistics behind. Put them in the comments box, and we can start to share some of this knowledge really here, and gain a statistical edge in the market when we're actually placing our trading strategies. So this is the key thing that you're looking out for. So look at these two outsider bars that you have just here. They're short signals. Why is that? Well, first thing is because we already said, let me go ahead and just punch in different color. They're short signals because, one, they have closed below the midpoint. Okay, close is less than the midpoint in this case. Okay, close is less than midpoint. That's your first point. Now your second thing about this particular type of bar is when you get let me draw that a little better. When you get a close below its midpoint like this, when you get a close below its midpoint like this, what it means is, generally speaking, the next bar that starts to form here, the next bar that starts to form has an 80% chance, right? Please understand, 80% chance. 80% chance that the low of this bar, will be broken first before the high is broken. There is an 80% probability, through research we found this out, there is an 80% probability that the low of the OB here will be broken first before the high if the close is less than the MR. So if close is less than your mid-range or your midpoint, there is an 80% probability that the next bar will break the low of the outside bar before it breaks the high. So start doing some research around this, and let me know what your findings are. You can comment in the box below just there. So that's it from me for this Forex Friday. It's been great talking to you all once again, and do interact with us. We look forward to speaking to you in the near future, either in the Master of the Markets live trading rooms, the Master of the Markets elite rooms, and congratulations to all of the live trade mentorship elite members who have taken these trades and are enjoying this profitability along with us after having a 6-week wait. Certainly we are rewarded in kind. So we'll look forward to speaking to you all very soon. Until the next time, stay disciplined, follow your plan, and trade like a master. Bye for now.